Hello friends, good week, good weekend. How are you? Vladimir here, and this is the weekly review for 11th of August 2013. Previous week was very interesting, and if you heard now I say the week, like that's a week, but on Russian. I'm just kidding. Sometimes a few words just coming with Russian accent. Sorry for that. So previous week was very interesting. We had some nice opportunities and we had some nice calls on the previous weekly review. We've been looking for the pound dollar, and I told you get ready to sell rallies, right? I expected the up move to this range, and it might begin right from here or even a bit higher, but we're getting ready in more and more for the next sell. We were talking about the euro dollar, that if it finally will break this resistance, it may take us to 134, which it did on the last week. Well, few pips missed, but it did. We've been talking about the euro Australian, that might begin the downtrend very soon, which it did, and I will discuss about it, of course. I've been talking about the Australian New Zealandian and here, and I told you every drop down opportunity to buy. And, which actually happened. And if you remember, right here I was talking about expect dollar Canadian to drop down to between 103.50 to 103.20, create a bullish divergence, which it did between these two lows, right? And expect an up move again to the previous resistance at least, which it did. Right? It never went higher, but it did reach our first target, which is perfect. So we could say it was very nice. We also were looking on a break of the silver right here, right? Remind you, we talked about it as well. So actually last week was very successful, and finally we got some moves. There are several things that are still working for a longer run. So let's get ready for the upcoming week, and let's also update the things that we have for longer. So first of all, it's time to remind that we are now in summertime, and summertime means that the volumes are much lower and that the moves might be zigzagging. We might see ranging moves during few days on a week, right? And the moves might be spiking up, down, nothing special, nothing real. Sudden moves might happen that you don't expect, on the hours you don't expect, and suddenly there will be a move. So remember all these things, okay? All the weird things could happen on summertime. Just remember that and trade careful, okay? It's very important to remind it from time to time, because we as traders that spend days for trading might forget it from time to time, okay? So just a quick reminder. Now I would like to start with the Australian pairs. Okay, Euro Australian will be the first one because I think it's the most interesting one. For some while I've been talking about the expected down move to happen, and I'm still in this opinion. I think Euros will make a cycle to the downside, and I think actually it is on the beginning of that. Watching on a monthly chart, we might see some attempts to pull it back again as closer we come to the end of the month, so it could be something like down, up again. I do think that during the next month it's actually going to make a stop here and make a bigger drop to the downside. We have a bullish convergence here, so actually I could expect a drop down that could be 144, that could be 142, that could be 140, or even 136 on the current cycle. Then I would expect another push to the last high, or maybe even to the next high around 155. So take a look on the weekly chart. That's a pretty impressive kicker. Opened here, created a new high, and bam, closed below the 50% of the previous candle. Pretty impressive weekly kicker. There is a continuing divergence on a weekly chart. There is an extreme on a weekly chart, double extreme, and a divergence also on the stochastic. It looks like a Marubozu on weekly chart, very close, and on a daily chart the divergence finally makes the pressure and we are going down. There is a very stiff support here, which we should respect and remember. It's there. Okay, it's waiting right on this place. There is also trend line waiting right here on the same place. If we will successfully go below this zone again, that will be pretty bearish call. If it go down, retest this level, that will be pretty impressive sell opportunity. Now listen carefully. On the 4-hour chart, we can see that we have already 11 candles right, which means if the wick opens and it continues to the downside, within one more day, 1.5 more day, within 9 more candles of 4-hour chart, we might create 20 candles right. RSI is closer to extreme, which means we might start to see for pullbacks. Okay, here on this zone, I would expect a pullback starting from this support, going through the current support here, not current, sorry, through the next support right here, and in between 144.30 down to 143, I would expect for a down move. And a stop there, and I would expect for 20 candles right on a 1-hour chart. We have 14 already, so 6 more candles, and it's going to be 20 candles right on a 1-hour chart. And right from here, I would expect for a bullish divergence and a pullback to the upside again. Then I think we should be looking to sell rallies. Yes. According to the weekly and the monthly chart, as I said, I expect a pullback. That could be back to 146, that could be back to 147, and that could be back even to 148.50. All acceptable. Right from there, we will be looking for the next resell. So make long story short, on the combination of shorter 4-hour with 1-hour chart, look for the 20 candles right, look for the divergences combination there, look for the support I just talked about, and look for opportunities to buy there. The pullback might be, as I said, to 146, 147, 147.30, which is the daily last support right here, spiking support, and it might take us even higher. Higher means the previous to the shoulder. Remember the head and shoulders I talked about on the daily forecast, right? It might take us again to the shoulder line, 148 plus, and then bam. So short term, look for buy opportunities. Longer term, medium term, longer term, look for sell opportunities. Sell rallies. Look for the rally, trade the rally, and then sell it. Okay, that's my opinion about the euro against the Australian. Pound Australian, same story. According to the weekly chart, continuing divergence right on the resistance. You see that? Around 172, 173, spiking the resistance, pushing down. I think we will go down to weekly 20 MA at least, maybe even more to 159. There is all the conditions are there. On the monthly chart, same story, right? Breaking this, never retesting, so it might be the time for some retest or pullback to the downside. And that's exactly what we should be doing, looking for sell rallies. Okay, looking on the 4-hour chart, we might have Bollinger Band duplication very soon. There are several supports waiting us. First of all, there's a trend line here in the support zone, right? See that? All that very supportive range. Okay, I expect a stop right here somewhere. It might be 1, 2, now 3, small 4, and a 5. RSI might come to extreme. We might get extreme divergence, new low on the MACD histogram according to the compared to the last 6-7 lows on the histogram. It might be extreme here and RSI below 20, then we'll get extreme, or alternatively we might see a pullback down again, continuing divergence, and right from here bullish cycle to begin again. This time I think the cycle will be much shorter. And again, combination 4-hour with 1-hour. On 1-hour chart, there is already extreme. Continuing divergence might be the next step. We have 15 candles already, 5 more, and we get 20 candles right. So down or up and down, then looking for rallies, and we will be looking according to the weekly chart and the 4-hour chart and the daily chart, sorry, to sell the rallies. Okay? Sell the rallies, but as for now, we're looking for buy opportunities on this zone here, and the up move can take us back to 169, 170, and 172. That's the levels will the rally I am talking about might take us to. Aussie Kiwi will be the next pair, and you know my opinion. I keep it bullish as long as we did not retested the for the daily 20 candles, right? Okay, it's pretty beautiful. We had a gap, closed the gap, now pushing to the upside again. I would go and say buy valleys every drop down we have, opportunity to buy this one. For me right now it seems that the pair might started here some channel. You see that in between these lows and this high now, it started something like that, up, down, maybe up again. Anyway, I do think we are going to 116, maybe even 118 on the current bullish cycle, and I think every valley with a bullish divergence is an opportunity to buy this one. I think we will go all the way to 116 zone approximately to close the upper band of the Bollingers. Maybe after that we will get a break to the 200 moving average on the daily chart. And don't forget that on the weekly chart, believe it or not, first of all, that's two very impressive bullish spikes, and we are now on 17th candle, so 3 more candles here on the bottom, and we will get 20 candles right on a weekly chart. That's very extreme, and last time it happened was here on 2004, and remember what happened after that, and before that it was happening on 2002, and remember what happened after that. So the longer we stay on the bottom, the stronger and longer period will be the bullish scenario. Anyway, I keep my bullish expectations, and that's what I want to go with. The next pair I have on my list is coming from the euro against the pound. The weekly chart is still under bullish pressure, and after the good news keep coming from Britain, I would not be surprised if we get some break to the downside here. Take a look. This is a daily trend line. That's pretty strong, pretty impressive, pretty long, right? Starting all the way from the bottom, right here. Very, very, very stiff trend line, and also there is a monster support. That's 85.50, approximately 85.70. If we manage to break it down successfully, hold below, this might be the beginning of the next wave to the downside. The next wave to the downside could take us back to 0.8460. That could take us back to 0.84. But I expect it to take us all the way back to this zone. From my point of view, this zone will be retested later or sooner. And to make long story short, if we manage to break this trend line on a daily chart, go with the bears, okay? Or in other words, sell rallies, okay? Sell the rallies. Every rally we get, that's a beautiful opportunity to sell. I remind you that according to the monthly chart, it looks like we are now still inside a flag, and from here we might go to the middle. Middle is around below 0.83 on 20 MA, and the middle of the flag is around 0.81. So we might see something like that, and then boom. So be ready. And of course, the timing is with the break of the daily trend line. That will be very strong and impressive break. What about the dollar Canadian then? Previous week we talked about the up move, which happened very beautifully, and now take a look. This trend line might be broken. Okay, a break of this trend line might open the doors for a move all the way to the next trend line. The next trend line is waiting for us on the bottom here. Okay, if it's from here or if it's with the spikes, it does not matter. So a drop down, a retest, and we might get a sell. I think that the dollar Canadian is able to make two things. First of all, continue to the downside, but pay close attention for a potential double top here. It might be a double top or a fake double top with small attempt to break and a break down to create the bottom and then break to the downside. If it managed to break it down, I think we are going all the way to below 102, then maybe even all the way to parity level again. Parity level according to the close price, close to close, and it's here. Okay, 200 moving average 101, and the parity, of course, this is the monster support here, the parity level Okay, it might be the beginning of this move, and as I said, I expected maybe to make the duplication. Duplication is still here. So break below that small trend line on the daily chart, rally, and sell this rally. Okay, to make long story short, break, rally, sell it. The most important thing for the bears is that the current resistance 103.50 hold. As long as we are below 103.50, the bearish scenario holds. Okay, keep it in your mind. This is another great opportunity from my point of view. Euro dollar and pound dollar. Euro dollar, we were expecting this up move. Is that the end? No idea, and no one knows, and I don't care. But what am I care about? 4-hour chart. Here. All right. Here we go. You see that? That's the support. That's the trend line we have. Okay, and that's what I want. A break below that, and welcome to the bears. Of course, I'm talking about a break and a hold below, right? Not a break and a false break immediately to the upside and close above that lines again. No, I want a break, I want a close below, and I want a hold. Break, hold, small retest, or inner cycle, or flag pattern, or some inner candle pattern, and then a break below the low created, we get the okay to go. If it happens, that might be the beginning of the down move that will take us again to the 200 moving average, or maybe even lower. In case the break to the downside does not come, and alternatively the euro dollar creates a bottom somewhere around this support and the trend line and pushing up again, then I remind you that we might go all the way to the next resistance around 135, 136. And according to the daily chart, we might be now only in the beginning of this pattern. So it might be this small down, up again, and from here, if it managed to continue, say bye-bye to the euro dollar and sell it full power. From my point of view, look for sell opportunities, not buy. Pound dollar, same story. It has a divergence already. It has 200 moving average, resistance, trend line. It might be the beginning. How to join? Same story exactly. On the 4-hour chart, there is a very strong support here around 154, and there is also a trend line. This trend line, or even if we manage to measure it this way, okay, if it does not break through here, but pushing up, pushing down, it might happen during the week to break to the downside. From my point of view, if we go below 154, which will be also daily 20 MA, if it managed to visit that and retest that, break below that, and we have the bearish call that might begin next very powerful, very long bearish move. In case it does not break the 154, it might go and make a stop right here on the 4-hour chart 20 MA or the 154, create some bullish hidden divergence, and take the pound dollar to the upside again. Upside that will take us to double top around 155 or 155.50, sorry, or even take us to 157, which is also very, very possible. There is a monster resistance there. Breaking above 157, then we get the 158 as the next resistance. As I said on the previous week, my view is the same for the current week as well. Sell rallies for long run. Pound dollar cannot be too expensive, and Carney will not let it happen. Every rally, every high on the pound dollar, opportunity to sell. Watching on a weekly chart, that feels the same exactly. If it pushes from here a bit higher than the resistances, it will be just to go for deeper sell. Sell every high, every rally. Or of course the break below 154, which is very, very, very possible. New Zealandian dollar is my next opportunity. I think this pair might take us again to the current resistance here, 181 zone, maybe a bit lower, or even to 082. Then I think we might be looking for sell opportunities, right? Something like that. Okay. There is a divergence, and on one of these levels we should be looking for sell opportunities. How we should sell? Well, honestly, I would do it very simple. Measure a trend line. There is a trend line on the 1 hour chart, and let it break. A break below the trend line, a break below the support around 08015, cross of the RSI below 50, and we have the bearish call for the New Zealander to continue to the downside. My targets will be daily 20 MA, or actually 4 hour chart, lower band and the support around 079.40, 079.20. This is the first target. Final target, last low around 077. I think New Zealand dollar in between 081 up to 082 will prepare the ground for the bearish move, and will start strong bearish move from there as well. What about the yen pairs? I really don't have any idea, seriously. I would be careful with the yen, for example, with the dollar yen, with the euro yen, as the euro yen has several supports on a daily chart, and on the 4 hour chart it looks like creating some bullish divergence. Honestly, I don't have clear opinion about the yen pairs. I would avoid trading them at the beginning of the week. If there will be any opportunity during the week, of course I'm going to talk about it a lot on the daily forecast, and I will keep you updated there. As for now, at the beginning of the week, I would not deal with that and trade it. What about the silver? Just keep our plan from the previous week, right? Break of the channel moving up. If it managed to hold above the 80.30 successfully, break, retest, and if it managed to hold it, I think it's a bullish call, and silver might take us to the weekly 20 MA, maybe even higher. So I'm bullish as long as the 2030 holds, even 2020. Same about the gold, of course. But for the gold, it has to break above the long trend line it created right here. It has to break it. Can you see that? That means a break above 1325. Generally, I keep very bullish opinion for very long run. What about the indices? Well, you know my opinion about the indices. Is that the beginning? I have no idea, and I don't really care. Maybe it's the beginning, quite a beautiful engulfing on the Dow Jones, a beautiful harami on the S&P and on Nasdaq. It might be the beginning. My opinion did not change. I am bearish on my view, and every rally is an opportunity to sell from my point of view. I've been talking about opportunities to invest in the corn, which I still think is perfect time to be in. Daily we have 20 candles right, even more. Every next important low with the next divergence will be opportunity to jump in more. Natural gas, same story, and of course the soybeans also. Every down move, every valley we have, it's opportunity to buy. I think all of them, including the wheat. See the wheat? Also, I think every down move, every next divergence, every bullish candle pattern or weekly chart is opportunity to buy and to hold for long run. I expect them all to create a bottom within several weeks and start the retrace to the upside. Corn, wheat, soybeans, all these guys from my point of view are very interesting. Natural gas, of course, as well. I'm bearish on indices. I am bearish on the majors, which I think will create a top and start a down move. Look for the rallies on pound Aussie and euro Aussie. Look to buy these expected rallies, which means buy the valleys on the 4 hour and the 1 hour chart. Look for dollar Canadian, euro pound. These all are amazing opportunities. Aussie Kiwi, New Zealandian dollar, all these are amazing opportunities. We have a lot of things happening, friends. Some of the trades we trade are for long run. Just enjoy it, okay? Enjoy cycles, enjoy trends, enjoy the moves. I'll keep you updated, of course, on the daily forecast about all the new things that will be created. And this is the time to thank you for watching this video. I hope you enjoyed it. I enjoyed it very much. I'm looking to trade. I'm looking for the opportunities I'm talking about. Thank you very much for your time. I wish you a wonderful weekend. Enjoy this one. The part of rest remain from this one. Rest a lot. Get ready for another exciting week. And I'll see you on the daily forecast. Enjoy your weekend and successful week. Yours, Vladimir Ribakov.